Basically, this is my charts on XAUUSD throughout the week. So this is basically all of the trades I took, right? I don't want to exaggerate. So this is where I took profits. I don't want to. Fuck me. Who is all these people? All right. So basically, I will need to delete all of this now and then restart again. I mean to take you all back to how I get all of these entries. Do you get? My network. All right, so basically this is a 4 hour time frame on XAUUSD, and if you guys, as you guys can see, this pair has been very, very, very trendy, right? We have been buying since, and it's very crazy, right? Just giving a little retracement, buy continuation, little retracement, buy continuation, like it has been very, very trendy, right? The thing is, someone that really don't have much experience on how to trade gold profitably won't really see good entries on this pair because it's not really giving very good retracements, which will kind of like makes it makes it have a very good or nice market structural movement, right? Just giving very little retracement and then creating new highs, little retracement, creating new highs, right? So let's go to like I don't know. I think I really don't want to do much, right? Let me just break down the trade I took last week and the reason why I took this trade. Okay, so let's start from here. This is actually where it happened, right? And I know you guys have a lot of have a lot of things to learn, even with a small move. Can everybody just move themselves, please? Ah. All right. So basically, as you guys can see, we had a favor gap mitigation, right? And after the favor gap mitigation, we had a new high, right? Basically, like this one right here. Right, I can see market created this new high right here after mitigating this favor gap, right? So after it created this high, so after it created this high, what does it do? When it gets to this point right here, it gives a retracement. Basically, when it gave the retracement, where does it retrace? What does it mitigate again? Another fair value gap, another 4 hour fair value gap right here. Okay, another fair value gap right here, FVG. Okay, so it was after this mitigation, it's now expand to the upside again. But then what really happened before the market mitigated that part of interest? Sorry, this is supposed to be on FVG. What really happened before the mitigation, right? Because the thing is. I think it's the 2 hour time frame. I was actually expecting a demand zone mitigation, right? I was not really expecting the market to come low to this place to expect that fair value gap. Right, I have a demand zone right here that I was expecting market to come mitigate this particular demand, right? This particular demand, right here. This was what I was hiring or I was expecting market to come mitigate as at then, right? But market give a little reaction from after the mitigation of the demand. It gives a little reaction. You can see this little expansion right here, but later drops back. Right. For me
Your screen
personally.
is.
Sorry?
I can't see your screen.
I think that was an issue from your end. Everyone else can see my screen.
You can see it.
All
Okay,
right.
I'm seeing it now.
Okay, thank you. Please mute
Yeah,
yourself
your
if I
screen is showing, sir.
just mute yourself, please. Thank you. So after this demand mitigation, we had a little expansion to the side, but this expansion doesn't make its way to the last high right here. Doesn't make its way to the last high before the markets come back to take the low, right? So the market taking this low leads to this demand zone being a failed demand, right? And there's something we call flip, right? If the market expects a particular part of interest a little bit, but later disrespect it, for me I call it flip, or maybe like what's it called? Maybe like I don't know. Some people call it flip, some people call it money transfer. Just have different names, right? You just need to call it what you understand it as. So basically, let's say we have a particular demand. Let's say we have a demand right here, and for sure the market has been bullish, right? So we have this particular demand. I said market mitigated this demand, but doesn't create a new high. But instead, what does it do? It expect it come back here to take out this low, and then even take out the low that's created or that yes, they have the demand, right? So this for me just like a structural shift. I call it a structural shift, or more like basically like flip, right? So now what do I expect? This demand zone right here is no more valid. Basically, the market doesn't really have the power to take, the demand zone right here doesn't have the power to take price higher, right? That was actually what led the mitigation not to create a new high, but instead create a low, right? That take out the demand, right? So you can call it a flip, you can call it a change of character, but then I call it a flip personally. So this structure, this pattern like this, whenever I have this particular pattern, it's either I expect sell from the nearest demand, from the nearest supply zone, or I use this high as an inducement to expect sell from a supply zone above, right? We are expecting mitigation of the supply zone in the sell continuation like this, right? Because I think basically that's like a structural change or a shift of structure, right? So that was the same thing that happened right here. I said that fine, this demand zone right here doesn't really have the power to take price higher. Basically, the demand zones, the buyers are kind of like a little bit exhausted, right? That was actually what led to the market expecting this particular point of interest a little bit that makes it, but the market came back down, right? Which leads to the change of this structure, of this particular structure. Okay, so now after the change of the structure, I was now expecting, okay, maybe like a very good sell, because I was expecting maybe this trend or the reverse trend of this particular structure or of gold is now bearish, right? Because in market I can see this thing has been very 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 trendy, right? Whenever I want to have the sell like this, the sell will be very very crazy, right? It will be very 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 crazy, and I pray I will be there. So I think you can find this like an internal change of character. So I was expecting sell from either this place right here, right? Because you can see, basically, you can see, I don't know if you guys noticed, but I personally I trade sweeps and inducements and pot of interest, right? So you can see this particular pot of interest right here. It has a sweep. That's a sweep right there. I was still connected.
Yeah.
All right. So it has right. I can see right here it has a sweep of liquidity, and it has an inducement right here. Okay, so I was like, okay, fine. I'll be expecting a pot of a sale from this pot of interest. So now I think that was a is it 1 hour supply? I don't know. But there's a particular pot of interest right there that I was expecting sell continuations from. And the crazy thing is, after the mitigation of that particular supply, right? After the mitigation of this particular supply, same thing happened again. Same thing happened again. Where I can see we actually have a mitigation of a supply zone right here. Right? I really don't want to like waste much time looking for the supply, basically. But there's a supply zone. I don't know if you guys can just maybe you guys can go just check that on your chart. But there's a particular supply zone right there. And after the mitigation again, we have another flip of structure, right? Because you can see right here, this low right here was created before the mitigation of this pot of interest, right? And after the mitigation, we have the market come back down, mitigate this particular demand, give a little reaction to the upside, and later break it through. Same pattern, right? Same thing that happened right here, right? So basically, these are now flip, which gives me a lot of confidence in the buys. Basically, I have a lot of confidence in the buys. And same thing, what actually happened was, even before the structure actually, because I have this personal principle for myself that I should not, or I will never trade against a trend until I see a very good confirmation to do so. Even if I'm expecting a change of trend, I should still follow the trend, right? Until the market actually change itself. So basically, you can see this is more of like an engineer liquidity. This area right here is more of like engineer liquidity, because I have a particular pot of interest right here waiting to be mitigated. So you can see the market actually move very close to the pot of interest, but later dropped, right? It doesn't give a good mitigation before the drop. So I'm still expecting a very good mitigation into that zone, right? Which gives me a very good directional bias of the buy, because I'm still expecting to buy. I'm expecting markets to go back to that zone. So that basically that gives me directional buy, a buy directional bias, right? So basically I was now expecting to like buy from maybe like the most recent demand zone, or anywhere the market will likely mitigate, which will like take price back to that pot of interest. So I see this very clean demand zone right here. I think I need to go to lower time frame right now. Though I'll be switching time frames because I'm actually explaining something, right? It's not like a breakdown. I'll be switching time frames also to make better explanations. So right here I have this demand zone right here. I have this particular demand that actually suits liquidity, right? Don't forget my pattern. Jesus Christ. Right here. So you can see this right here. Don't forget my pattern, a sweep and an inducement, then pot of interest. Right? So basically right here, this demand zone right here doesn't have an inducement. So what do? right? Is that I wait for engineer liquidity before mitigation or engineer liquidity during mitigation, right? It's actually different. The thing is, you all just see a lot of things about engineer liquidity on Twitter, right? But these are things that some traders actually found out themselves, right? So they came to Twitter to teach you guys, right? And it will make a lot of sense if you to actually find out something through learning, through constant studying of a particular pair or series of pairs. Ticket. So actually study something about general liquidity, right? There are sometimes where general liquidity happens before mitigation, and there are sometimes where general liquidity happens during mitigation. For example, let's say we have a high right here. Sorry, we have a bullish structure basically, right? So I have a sweep as usual, and
Sir, please, we're not seeing I'm not seeing it, sir.
you're not saying what?
I'm not seeing the screen.
Jesus.
Your screen. It should be from your end, though. I'm seeing it clearly.
All right, all right, all right. Thank you. Who's that? Okay, thank you.
You guys should stop cutting him off so I can.
I don't lose. Where is that I talk? Okay, sorry.
It's from your hands. We are seeing it. We are seeing it well.
All right. It's fine. Thank you. So basically, we have this bully structure. Let's say you have this bully structure, right? And for me, I see. Basically, I should expect it buy from it from the demand zone, right? Because it's a bully structure, and I am supposed to follow the trend. I'm supposed to follow the other flow, right? So I'll be expecting a buy from this particular demand, obviously, right? Because it's a bullish structure. So when the market now gets to the demand, after the creation of that demand, right? This particular demand doesn't have an inducement, right? It's created a sweep but doesn't have an inducement, right? So what do? I wait for engineer liquidity, right? I'm actually calling it engineer liquidity because a lot of people y'all know it as engineer liquidity. That's what they call it on Twitter. But me personally, I call them newly created inducements, right? Because market actually created it on its way to the mitigation. So I call it really newly created inducements. It's basically that's what the name I actually like calling that because I think I feel that name more basically. So we have two different types of engineer liquidity, right? It's either the engineer liquidity happens before mitigation, right? Something like this, right? Before they actually move to the upside. You can see this particular low right here doesn't mitigate the pot of interest before the little retracement, then the real mitigation happens. This is a very good example of an engineer liquidity, right? And there are some times where we have engineer liquidity inside of that pot of interest, right? Inside of that pot of interest, something like this. The market has actually mitigated it, right? We now give a little retracement. Though the low, this amount doesn't really have an inducement, right? But then the market won't create an inducement. They won't create the engineer liquidity before the mitigation, right? It will actually go to mitigate it. After it mitigates it, it will respect that particular part of interest a little bit, and then still come back inside of that mitigational point. This one right here, still come back here, take out that particular low. After I now take out that particular low, it will now be moving to direction, and everything. All of those things are actually happening in that particular demand inside of that part of interest, right? It's not that when the market wants to go mitigate the low, it will now maybe just expect the supply, it's the demand rather. It won't, right? It will just take out the low of the first low that caused the mitigation. Right after it sweeps that low, heads to the direction of the market, to its initial direction. So basically, you can see this is not really a straightforward external liquidity, right? This actually happens inside of a pot of interest, right? So just bear in mind. I don't know. Maybe you guys will just go study that, right? I don't know if you study, you definitely see what I'm talking about. So this basically that's actually what happened right here. So this low right here, this first low right here, mitigated it, right? It's mitigated the demand zone. After the mitigation of the demand, okay, wait. I think we still need to refine the part of interest because I think it's way more smaller than this. My network is fucking me up real bad. Not gonna lie. Sorry about my network. It's a little bit raining. Fuck me. Alright. Okay, good. So if as I was talking about engineer liquidity, if basically that same thing happened, I'll be expecting if the market doesn't create this engineer liquidity, I'll be expecting the market to come to this zone, right? Come to this zone, give a little movement to the upside, and come back to that zone. Take out this low right here before the movement to the upside. So basically, this is an example of an engineer liquidity inside of the pot of interest, right? But something like this, because you can see, I actually refined this particular pot of interest, and You can see we had a little reactions right here, which tends to be the general liquidity, right? Because market actually retraced to create the buy even before mitigating it, right? So I am very very much aware that this is an additional liquidity, and the market will still sell from the nearest supply. Look, like all those things is just about knowledge. All these things is about tactics, right? It's about hedge, basically, and it's about you having a story or a particular story about support of your setup or your analysis. Okay, so the market creating an additional liquidity, right? And I see a very sharp buy. I was actually on the road when this thing happened. I see this very very sharp buy. I was like, fine, the market hasn't mitigated a bit of interest. I'm expecting it to mitigate yet, so I'm still not expecting any bullish move yet until that mitigation. So basically, the market expecting or the market reacting before the mitigation, we actually still sell back to that point of interest. But how will I join the sell back? How will I join? I mean, basically, how will I take advantage of that sell back to this point of interest right here, right? So the thing is, I sell from a recent supply, which is this one right here. This particular supply zone right here. And if you want to check through the candles, you can see we have a little bit sweep right here, and then this high right here tends to be my protected high, right? And the market moving above this protected high a little bit, I mean, with a little weak, it doesn't really mean anything. Just about sweeps, just about concept of liquidities, right? If the market had maybe like close above this high with a candle, but I'm not fine. Maybe this sectors, this is not really, it has been, or what's it called? Maybe the setup don't spray that kind of thing. But basically, I actually get into it. I don't know if you guys go check the viral, what's it called? The screenshot I sent to the Telegram channel. You guys will see that I had a little sell from here. Alright, I had a little sell from here, taking profit at this low and anticipating buys from here. Right, I was not even now looking for any confirmation again because I'm very very sure of what is going to happen basically. Okay, fine, let's do it like this. So after I got into a sell from here, right, and actually the market just moved to the take profit without even wasting any time. Moved to take profit without wasting any time. So when it gives the mitigation, I was like, fine. Actually, I was expecting to sell from the supplier zone. I was expecting to sell, but I have no reason to sell when the market has not told me to sell yet. So I still need to follow that structure. I need to follow that structure until it gives me a very, very, very tangible reason that it has changed structure. So I just follow it because actually learned this the hard way because I think during the early stages of my trading career, I had a lot of losses, and all of these things is being traced down to me trading against the trade because I'm actually anticipating a change of trend. So the thing is, I'll just anticipate a change of character. I'll anticipate a reversal, and I'll be trading, focusing on that reversal, right? Basing my bias on that reversal. Even if the market is not giving any reversal pattern, I will be framing my analysis on that reversal because basically that's where I programmed in my mind that the market is going, which is very very wrong, right? I can't control the market. I need to like react. I need to like react to the movement of the market, right? Not to like frame my brain to a particular direction, which is very very wrong. So that actually makes me lose a lot of money. So basically, I now set a particular rule for myself that I should never trade against a trend until I see a good reason the market wants to like maybe change trend or like, do you get? So even me anticipating sell from here, right? Because basically anything can happen, right? Anything can happen, right? Even this demand zone that we're anticipating can still fail, right? Because basically, if you guys can check it very well, we have something like a trend line liquidity right here. I don't know if you guys can see that. I don't know why this thing is not loading. Fuck me. Damn. I'm sorry about this, guys. My network is actually fucking up. It was because of the rain. So can see right here, you can see we have this particular trend line liquidity right here. Right. The market might still expect this supply zone to go to come take out all of this trend liquidity and still take out this high. So I'm not really married to a particular bias. Alright, I'm not really married to a particular bias, right? I'm just being reactive.
Hello, Steve. Hello, sir. Steve, I have a question.
Calm down, just calm down. Bro, calm down. We answer question later when we are done. Thank you. Alright, so I see the trend liquidity right here, and I'm very very sure that okay, fine, the market will take out the trend liquidity. The market might take out the trend liquidity, which relates to like the market just expecting this particular supply. Do you get? And we targeting this trend liquidity, market will definitely be requesting a new high. Right. So how do I react to that? Basically, I think after I got into a sale right here and the mitigation happened right here, after the mitigation of the supply zone, I got into a buy almost immediately. I think I actually break down this down to my students, right, when we were doing the weekly breakdowns or weekly outlooks. Right, I got into this buy directly, targeting this as my first TP and this high right here as second TP or final targets basically. Right, after I got into the buy, it's actually reacted very well, right? And if I can remember very well, I think it printed around 60 pips. Right, it's printed around 60 pips before the reversal. And after the reversal, right, you can see right here, it now leads to a change of character of this particular low. Right, but then I am still not really convinced with that sell. Right, I'm not really convinced with that sell. So now I now go back to like a 3 hour time frame. I see that okay, now the market creating this low right here, it's actually mitigated a new hidden base. I don't know if you guys know the meaning of hidden base. Hidden base are just like wicks that have been created in lower time frames that are basically like maybe a supply or demand zone in the lower time frame, but they'll be in form of wick in the higher time frame. Right? I don't know. I'll actually be getting serious with YouTube soon. Right, so maybe I'll just teach you guys a lot of those things. Okay. So I now see the market mitigating a particular hidden base. This one right here. This particular hidden base right here. In terms of like week, basically that's an hidden base right there. So, and this particular hidden base have what? It have what's it called? It has a sweep of it sweeps liquidity and have an inducement, right? 1 hour. I think it's in the 4 hour time frame basically. Okay. Right, so basically this right here, this is the hanging base right there, and it shows liquidity. If you can look through the candles, you can see it actually goes below a particular low right there, which tends to be or leads to a sweep of liquidity. And this low right here, right, this low right here tends to be the form of inducement for this particular pot of interest, right? So sweep of liquidity and an inducement in the PY right here. So basically this leads to me now expecting what will happen right here. Right, the thing is, if I'm actually married to that sell bias, do you see? No, I was actually anticipating a sell movement right here. If I'm actually married to that particular sell bias, right, I will get burnt really bad, right? Because I'll be expecting sales maybe from this particular supply. I'll be expecting sales from there, right? But then I see that okay, fine. This overall this structure right here, I mean, the market mitigating this fair value gap right here can still lead to the market continuing the bias because it's a very good pot of interest and the market is not yet bearish. Do you get? I'm actually just anticipating the sell little bit because we have an internal change of character. So the market mitigating fair value gaps and still maintaining the bullish trend doesn't really gives me let me say it doesn't give me the expectations that the market will just sell just like that. Just start selling just like that. Right? To follow the trend basically. Right. So after the mitigation of the fair value gap of that hidden base, I go back to lower time frame to maybe like really for confirmation or stuff like that. Then I got maybe like a change of character. Okay. Right, it's actually what I noticed on this particular pair, XAUUSD. I mean, it's expect fair value gaps a lot. To expect fair value gaps, especially 30-minute fair value gaps, 30-minute fair value gaps and inducement. Bro, these things are shit schools on XAUUSD. Not gonna lie. Right, so after the execution of that particular heading base, what do we do? I mean, what do we see on XAUUSD? You can see this one now like change structure to the upside. Right, change character to the upside right here by taking out this low. Right, this was the mitigation and this was the low that was created before the mitigation. So the market take out this low, the market created this low, created this high, give the mitigation and then take out that high after the mitigation. Right, that confirms the buy for me. Right, and okay, fine. After I confirm the buy, what am I supposed to do? Look for nearest put of interest where I'll just get the entry to follow the buys. Right, and it's fair value gaps. Right, as I said before, 30-minute fair value gaps. Right, 10-minute fair value gaps. You can see this one right here. I think I still see another smaller one in 15 minutes, I guess. Right, this particular fair value gap right here. This is supposed to be maybe like a higher internal liquidity, right? Because it's a little bit far from the point of interest. But then I just take it as an inducement, just like that, right? It's not really supposed to be an inducement, right? Because it's a little bit far from the point of interest. This is supposed to be an IRL, right? Internal liquidity, but I just take it as an inducement, basically, right? So I actually got my buys from here. My buy from here. My take profit, my stop loss were I think below this fair value gap right here. You can see we have another fair value gap right here. So my stop loss were below that. Because I don't know, the market might not expect this one, then come to expect this one. Do you get? So I got my entries from here, and I was targeting this first high and the last previous and the most previous high, which is this one right here. This one, right? I target this one as my final target, and then target this one too. Okay, so the trade actually plays out well, which makes a lot of sense basically. right? It plays out well for me. And now let me now break down what really happened before we take out this eye, because I got two more trades at this point of interest, right? I got one losses here and one wins here, and I'll break that down for you guys soon, of course. So after it actually goes here, can see right here I was expecting. Let me do this. Let me do this. Right, of course I was expecting the market to come take out this eye to create a new block of structure, right? A new external block of structure to the upside, right? And before the market can take out that high, before the market reach that high, something like this, before the market reaches that high, you can see the market gives a very near move to the high right here, but doesn't take it out, right? And then moves it down to maybe like create a little retracement before actually moving again to create a new block of structure. Okay, so after it's created the block of structure, right, I was actually following the internal structure, right? I was following the internal structure. Like this, I mean, me personally, I trade based on structures. So I'm following the internal or external structures, and me trading internal and external structure doesn't really fix, or it's not really based on a particular time frame, right? I can take any time frame as an external, and I take the one that's smaller on that particular time frame as an internal time frame or internal structure, right? Where I don't follow the structures. You get. So you can see right here before the market could take this side. No, like all of this is just about logic. It's about common sense. You get. Before the market take out this high, it's created this move right here. This move failed to take out that high, and you can see that it's created. It comes there to give you retracement. I don't know what. I mean, anything you want to mitigate, you mitigate, but it mitigates something right here. And after the mitigation of that thing, it changed character right here to the upside right here. Change character right here. After I change character, give a little retracement. Give another expansion to the upside. Okay, fine. After this particular expansion to the upside, give another retracement. Okay, after this retracement again, give another expansion to the upside. What am I supposed to do? Basically, right? Because I'm targeting this high, and I'm sure the market will move to this high because that's what the viral structure. That's the order flow, right? And what really happened there was I want to like join this internal structure, right? You can see this internal structure right here. I wanted to join this internal structure and then target this final high, this final last high right here, this final movement. Sorry, this final targets right here. I wanted to join internal structure, and I can now see that okay, fine. After this break of structure again, right? Market, okay, we had a break of structure right here. Give an expansion, give a retracement, add another break of structure, and even still, this break of structure right, just take out this recent high, but doesn't reach the target, right? And I am still expecting a good move and very close above that target, which will now equate to like a change of a break of structure, an external break of structure, right? So you can now see that this eye right here, who is that now? Ah. All right, so you can now see that okay, fine. This eye right here, doesn't get. Jesus Christ, Jesus, I don't die. Who be this? Everybody just mute themselves. Ah. Okay. Okay, so now I can see like this eye right here, doesn't get to that target yet, and we had a retracement already. So I was like, okay, fine. I'm actually still following this high. I'll follow the buy, right? I'll follow this buy right here. I'll follow this internal structure right here that will lead to the market's taking out this high, right? So I'll now go look for the nearest spot of interest, which actually leads me to the 5 minutes time frame, right? Let me get into the 5 minutes time frame. I can say that okay, fine. We have a nearest demand zone. A minute. Fucking. So I was like, okay, fine. I'll take the buy continuation from the nearest demand. All right. So right here, I can see this very neat demand zone right here. Right, I see this very clean demand, and this particular demand zone right here, can see it sweeps liquidity. Okay, sweeps liquidity with weak, right, and it has an inducement. Though this inducement right here is not really near, so I would rather call that an IRL in internal liquidity, and every IRL is supposed to be taken out, right? And after the creation of an IRL, we expect an inducement. Okay, so now I was not expecting. Okay, fine. Maybe I will now see maybe add engine and liquidity, right? So all in the type of engine and liquidity that happened right here is the one that actually happens inside of the inside of the pot of interest. The one I explained earlier during the start of the class, right? Meaning the market will like create what's it called? Create a mitigation, right? And then still come back to come take out the load that created the mitigation before the movement to the upside. All right. So like okay, fine. I got now. I'm not got my entry right here from this particular low, right after the take of that low, right? And I was target. I think my stop loss were actually very, very. I mean, I gave the market a very good breathing space. I was supposed to put my stop loss right here, right? Because this tends to be my protected low, but I actually put it right here, just to be very, very to feel more safer, right? After I put the stop loss there, and I was targeting this target again. I was targeting that high again, okay. And as you guys can see, right, we had after we had the market sweeping this low that caused the mitigation, you can see it moves out of this high. All of this is actually happening with week, right? And it's not really for like beginners, right? It's supposed to be like an experience for experienced traders, right? And after we have the movements, right, we had the market moving above the standard week again. So I was now expecting maybe I'll just buy it from maybe like a particular demand zone right here. I don't know. Right here. So but I actually got two entries, right? Which tend to be the a re-entry basically, right? I think I actually posted this particular setup on my WhatsApp, right? Those my WhatsApp viewers actually trade this, but what really happened was we got taken out, right? The market just stripped us out a little bit before actually expanding to the upside, right? Normally trades like this, I really don't really like trading them. I mean, any particular setup that won't allow me to put my stop loss at the protected external low or highs, I really don't really like trading them. Do you get? Because normally if I want to trade from anywhere in this structure, my stop loss is supposed to be at this low because this was the last market created before expanding to the high, right? This is supposed to be the protected low. But there's no way I want to like take a buy from here, put my stop loss in, and put my TP here, bro. That's crazy. That's like I want to fall. The fuck, I can't trade that. So that's really why I just trade following on the structures and following previous mitigations, right? So after the market take it out, yeah, after the market give us the mitigation and markets respect by going to my direction a little bit, can see it moves almost gets my TP. Then we have this crazy sell to the upside, which now later expands to the upside, right? So basically, we got sniped out in this one, right? And markets went back straight to our take profit, right? After I get to our take profit, I was like, okay, fine. We now have a very good because structure of this external structure too, right? This 15-minute structure, right? Mind you, all of this structure that I was trading is just all of these things happen in 5 minutes, right? And 5 minute structure is way more different from the 15-minute structure, right? All of this was the structure that I was trading. This is what I was trading. Did you get? This was what I was trading basically, right? So after we now take out this eye, right? So basically, this my entry right here got it's take profits, right? So I'm actually out of this, and it leads to a break of structure of the 15-minute structure of this 15-minute structure right here. Let me break that down. Something like this. You can see this particular structure right here, right? This particular structure, okay, for the bullish continuation, and it's still very, very bullish. I was like, okay, fine. Now, how will I take advantage of this bullish continuation? How will I follow this structure? Because I shouldn't be expecting a change of character. I mean, it's the reversal immediately after a break of structure, right? I shouldn't anticipate a reversal when the market hasn't really reversed yet. So I seem to like follow the structure, right? So what do I look for again? Pot of interest, right? And basically, my pot of interest must sweep liquidity and have an inducement. Okay, so that actually leads me to like looking for the nearest demand zones. So now I actually came up with two pot of interest, right? This extreme demand and another demand right here. Right, this extreme demand zone right here. Right, this extreme demand, right, it sweeps liquidity in terms of weeks, right? And I was expecting what an original liquidity, right? Or maybe this low right here as an inducement, right? Maybe that was an inducement, right? But then, Jesus Christ, what was that? Ah, fuck me. Right, so I was expecting market to come to get this demand and then have this one as an inducement. Do you get? And if you go lower to the 15 minutes time frame, I have another demand zone right here, right? Another unmitigated demand with a sweep and with an inducement. Okay. Right, guys
Sorry,
can see.
Mr. Mide, your call will end in 15 minutes time.
Yeah, no, thank you. All right, so we have this particular demand zone right here. We have this particular demand, right? And it has a very, very, very near inducement. These are the kind of inducement I love trading, really, right? It has very, very near inducement. And if you can see right here, it shows liquidity, right? So this low right here was supposed to be a protected low. Okay, so I can actually see my edge in two different places. This one right here and this one, right? So I really don't know the one the market will use, so I have to just like risk on two of them, right? Maybe I got an entry from here. If the market take this one out, then I'll take my buy continuations from here, right? But I can't really, leave one to trade the other one because I really don't know the one the market will expect. Check it. So I now mark out this demand and got my entry from this demand, and this low was supposed to be, and this low was my protected low, right? So this was actually what leads to me taking the last trades, and I actually shared this one with a particular Signal subscriber. It's more like one-on-one Signal subscription basically. It's not like general stuff, right? So we took these trades together and actually went to take profit. Okay, so after we hit up TP right here, right, I was actually very, very pained for not holding these trades. Basically, I was very, very pained because after I think it was the second day, right, we had this very, very long expansion to your side, which is very, very fine, right? So can see right here, this was just all of the trades that I took basically last week, right? And this one was around 140 pips and 1 to 7.5 weeks reward. Okay. So after we break structure again, and mind you, the market was still following this internal structure, right? The market is still following this internal structure right here. Sorry. You can see this structure. The market is still following this structure. Right. Maybe you're expecting another retracement, then another expansion to the upside. I can't tell. And maybe we can just not maybe like get the reversal from here. I can't tell. But then I will still be following the trend until I actually had that particular loss that would make me know that okay fine, this is the change of trend has happened. So I think that's just all about the trades I took last week on XAUUSD, and that's pretty much the breakdown. And I really hope you guys learned something. So this this session will be heading in less than 15 minutes. Right?
Please, Mr. Mide, can I ask a question, please?
Yeah, we are asking questions now. So this class is ending in less than 15 minutes time frame. So I think I'll be getting your questions in now. So anybody that have a question should just unmute yourself and talk.
Okay, thank you so much. Thank you so much. I really joined late. I've been asking to join for a long time, since 3 o'clock, but I just got accepted late. Thank you so much. Okay, like the last two POIs you actually drew. Okay, I also drew those POIs too. I was expecting price to come to the M30 support. I felt the other one has already been mitigated.
Yeah,
the one
yeah,
at
it
the
was
top,
actually being
which you took.
Yeah, this one right here. I think it was like a mitigated point of interest
Yeah,
in the 30
it was
minutes.
mitigated, and it was during the news. The news on
Yes.
that was on Thursday, right? The news. So the 5 minutes showed me. I used a 5 minute, and it shows me a tweezer bottom on the 5 minute, which is a confirmation. But that's why I want to ask a question. My question is this:
Yeah, I think
I've been following your analysis and a lot of things over time, and your results and all that. What amazes me is the kind of I've asked you before about psychology, and you told me you don't really take psychology that seriously, just about money management. I don't know, because I do this analysis, and I find myself analysis paralysis, being scared to take a trade. Meanwhile, all my analysis, most of them play out 80% all the time. Then the one I finally then take hits my Excel, and most of my analysis goes well. But I am scared of taking the trade, probably because I want to be too sure. Several times, even yesterday, I saw trades. I want to be too sure. I wanted the price to come to 27.03, and it bought at 27.056, 27.06. And I knew that buy should have played out, but I was thinking they will come to the extreme low. But a lot of things is happening in the market where you expect market to react, they don't react there. and it makes me afraid. So the question I want to ask, how do you summon this courage to take trade? I don't know, take trades with, are you not scared of hitting SLs?
Okay.
How are you able to overcome fear of hitting SLs, all those things? I don't know.
The thing is, all of those things actually happens when, all of those things won't really matter. It won't affect you if you plan your trades before you get into that trade, right? So, and the thing is, I have a particular rule for myself. Like, before I enter a trade, I have to like plan everything that I will do inside of that trade. Basically, I will like analyze possible things the market will likely do after I got into the trade, and I will like find the solutions for myself. What I will do if the market do this, right? My reactions. And the best part of these things is, even before I get into a trade, right, I will like take that particular trade. I will like frame the outcome of this particular trade in my mind that okay, is a loss, basically, right? So me now framing it to be a loss, right? I actually accepted my risk even before I got into a trade. I've assessed my risk and I know what I want to do. Okay, so me now getting to that trade, and the trade actually given the reaction that I really don't expect, or maybe like this TP, I'm sorry, it's the stop loss, and won't really be affected, right? Because I've actually accepted my loss even before I got into the trade, and I know I'm actually trading my hedge, right? I know that even if I have five losses on a row, I would definitely still get all of these things back, and it's not really like I'm actually just like trading just to feed myself. Of course, no, I have a lot of, basically like I'm actually good with myself, right? It's not like I'm actually needing that particular profit to feed myself. So I have no emotions attached to this particular trade. Do you get?
Wow. So thank you so much for that. Okay, the last question, because I know that's one to ask. Last question is, where do you take your confirmation? Is it on M15? Because I see you make some posts M15 and M5. So I want to know, where do you take your confirmation trade? And where do you use yours as your intraday time frame? And where do you take your execution? Do you take instant sometimes, or just limit orders? Then also, how do you hold trade for days? What's the courage to hold trade? I don't hold for days.
Okay,
how do you hold trade for 4 days, 10 days? You hold the trade.
The thing is, I really don't have fixed time frames where I like maybe wait for confirmation or all of those things, right? Because I trade structures, right? Structures like the core thing in my strategy, right? I trade structures, and when we're talking about structures, you have internal and external structures, basically. So every time frame has its own structure. Right, so it now depends on the structure I want to trade. Because basically, you can see this particular trade right here was taken with this 5-minute structure. This particular structure right here.
Yes, sir.
Right? While this one, yes, why this one right here was taken in the 15-minute structure, which is this one right here. Right, so it depends on the structure I'm trading. I have to like focus on that particular structure, and then maybe like I really don't even need confirmations like getting most of my trades, right? Because even the only thing can make me wait for confirmation is if the zone is too big for me to like risk, or I'm not really sure of the trade. And the thing is, most of my trades, most of my analysis, I'm actually sure of them, so I really don't need confirmations, right? Which actually leads to me giving most of the time getting aggressive entries. After the demonstration of my pool of interest, I just got into the buy or got into the sell. Depends on the direction, right? So I think that's just it. And the courage for me holding trades for days, it's I just like after the market moved to a particular amount of risk reward or particular number of risk reward, I think I like close partials and break even. So like that's I'm less concerned of the outcome of the trade. Is that HTP? Right, maybe if it's TP, okay, fine, that's good because I make money from the trade. And even if it's break even, right, I've closed some partials already and I still make some money off the trade. So I don't really.
All right, thank you. Okay, will you do this often, like for us to always get?
I wasn't even expecting this to be this what's it called?
Massive.
No. Yeah, actually, I got
last question, bro.
Calm down. You ask questions.
Time for the guy, only just talk.
Fuck you. Okay, next question, please. We have a question. No other question.
Thank you so much for the class. Okay. Please, can I ask a question? All right. So, actually, I so much enjoyed the teaching. I thank you so much for that. it's a paid class. Should be a paid class. So I appreciate you. The question is based on what you said on your WhatsApp, but you talk about how to grow an account. So I don't know if there's still time for that.
No. I think I will do that another day because this is don't almost finish. You have like less than 10 minutes left.
All right.
Yeah, we'll talk about that.
All right, no problem.
Yes. Anyone next, please?
All right, okay.
Yeah, I can hear you, Maxwell.
Okay, so thank you very much. All right, I wanted to ask something. Now, like the same question that person was asking about you having college students.
Please, can you just speak louder? I'm not hearing you.
Okay, I wanted to ask about you having the courage to enter trades. Like, for example, the last trade you took yesterday when you spoke about Lex, I saw it on X when you said Lex touching this. You entered on
this guy
value cap on gold.
Calm down. Bro, I'm not hearing you. I'm not hearing you, guy.
Hey.
Just go slowly, please. Just calm down and talk. Thank you.
Okay, so I was saying that, like yesterday, there's a trade you took on gold. I saw it on your Twitter account. You posted it. Yes. And that was around the 30-minute time frame. You entered at the fair value gap. So now, if you enter that trade down that you entered, if you look down, there are a lot of other fair value gaps. What gave you the courage to know that one was going to work out?
The thing is, I actually learned this thing from someone that I really admired a lot. Right? When you're talking about fair value gaps, basically 30 minutes fair value gaps on especially gold. 30 minutes fair value gaps that have inducements works like it's basically like a cheat code, basically, right? It's either it have a normal inducement or an engineer liquidity, right? So me seeing a fair value gap with an inducement, basically I know that's like an hedge on its own. Basically that's why I love trading. That's basically what works a lot, right? So that really give me the reason not to look at other fair value gaps that really do have an inducement, because I think the one that have inducement have more probability of working than the other. So that is why I just take the shares.
Okay, so that's all my questions.
Next question, please.
Do you take confirmation before you enter the fair value gap?
Nah, I don't wait for confirmation before I enter the fair value gap. I didn't take confirmation from trades. Calm. I didn't take confirmations from trades. Calm down. Fuck me. I didn't take confirmations from trades that I mean from part of investors that I don't really trust. Like example, like that EDB's tickets. EDB's is not really what I use most of the time. So I just confirm the movement of the market after the investigation of that particular EDB's. So
okay, thank you.
The next, I have a lot of people raise their hands right here. Fuck me.
Mide? Yeah, I don't know if you'll be doing this next week or over the time. I would like if you can just take us more on POIs and EDBs, the one you just talked about just now.
All right, I'll try my best to do this more often. Or rather,
right,
I can just be posting them on YouTube for you guys. Be making YouTube videos.
I don't know, the network is breaking.
Yeah. I mean, this class will actually end any time from now. So anybody with another question, I have a lot of people raise their hands right here. I don't even know.
Hello, sir. I have a question about how you stack trades depending on account size. Is it a matter of leverage or something?
Yeah. Basically, leverage is actually one of the very, very, very it's an important thing when you're talking about stacking, right? Because leverage actually gives you to risk more than your account balance. Do you get? So, and when you're talking about stacking, right? If my own stacking, right? If I want to stack, it's either I stack responsibly or I stack aggressively, right? But then a lot of things is stacking. Let's for example, I want to manage risk on a particular account, right? If I want to stack, I will use my supposed lot size for me to manage risk on that account, my supposed lot size, and I will divide it into many pieces, right? So I'll just enter all of these trades, basically just stacking, right? Because I'm actually taking a lot of positions at the same time, right? But if I want to risk aggressively, right, I'll deposit maybe let's say $500.
Your call is about to end, so I don't know if maybe we could just join in again, or
But
I don't
please,
know.
differentiating IRS are the inducements.
Jesus, I don't die. I think we just end it here, bro. Fuck, this really is so much for me. Fuck me.